Good morning. You guys ready? All right, let's get on with it. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, that's me, but there is no me. What's going on with the cam? No camera. Yeah, things have been glitchy in the software for a while. Let's see if I can add this. Well, I know I can add this. Will it work is the next thing. All right, that'll do, pig. That'll do. It's not the right aspect ratio or nothing. So anyways, hey, my name is Wayne. I'm looking over there, but the camera's over here. Extreme close-up. Oh, my God. And then move it. There, a little better, I guess. Anyways, it's not right. It's not right. It's close. Let's see. I think it's just because of the wrong aspect ratio. Yeah. Anywho. Terrible. Terrible. Anyway, so I salute you. Ciao. So what do you want to do today? Technicals, fundamentals, all that kind of stuff? Yeah, why don't we do it all? How about that? That's a little better, isn't it? Do I got it? How am I doing? I got it? Is it good? Huh? All right. Cool. So let's get on with it. Things you'll need. You need good execution. You're going to want an ECN. TryTradersWay.com. You need good data. You need good resources. You need a good team. And all of that's available at traders.com. Very nice. And that's the complete, okay, research, data, team, otherwise known as coaching, courses, and community, and execution. That's all you need for success. Technicals, fundamentals, coaching, right? Think about it. Even Axe Capital had a coach. So why would you put all those resources together, develop a solid trading company, and then hire a broker that trades against you? Why would you do that? Doesn't even make any sense, does it? So anyways, an ECN doesn't do that. ECNs don't trade against you. So get yourself an ECN. All right, cool. So tomorrow we got some CPI. And I had pulled this up earlier today. At the Federal Reserve Economic Database, otherwise known as the FRED, few months ago, I met the people in charge of the Fed, which is really cool. So imagine now your trading was powered by data. That's really what it comes down to. So much of the data, much of the fundamentals that we get at TRADARS come from the Federal Reserve databases. Not all of them, because we get from other sources as well, but that's the source of our data, really, if you think about it. If not this central bank, some other central bank. Okay? So it's kind of cool to have access to that data. You can change what it's measuring. Okay. So for example here, percentage change from a year ago, 2.9. And we get a new observation tomorrow. Find out, is it rising or is it falling? Okay. Not sure if you know how to read this or not, so why don't we talk about it? Okay, inflation rising, recession. Inflation rising, recession. The gray bars are recession. Inflation rising, 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 COVID. Doesn't count, does it? But we were rising, not to unsustainable levels or anything. But then we had a recession, which was not economically created, but instead was created by, the pandemic. But then the government's response, both the central bank and the central government's response, was collapse. Or was, too much stimulus created a ridiculous acceleration of inflation that we haven't seen since Jimmy Carter. Okay. So the question is, are we going to move back up? Well, maybe, right? So let's zoom in a little bit. And this is Sep, Oct, Nov, Dis, and then we get a new print. And this is what's bothering the Fed. So this is, if we go back in time, this is the market. The market's suggesting the Fed's going to cut 6 times, then 5 times, then 4 times, then 3 times, then 2 times, and then and then we're taking the cuts out. We're taking the cuts out. I guess I probably said this backwards, didn't I? Sorry, I can't think and draw at the same time. But nonetheless, this up is disconcerting to the central bank. And when we look at the summary of economic projections, in which we do, this makes a ton o sense. Hey, you guys going to fill out the form? I know I asked you to fill out the form earlier, but then I popped a new form because of Richard. Richard's like slightly something. So I'm like, okay, I'll change the poll. You have to choose a team. Are you bullish or very bullish? Are you bearish or very bearish? Cool. So tomorrow is the next release. Cool, right? Yay! See, updated. Isn't that nice? Well, isn't that special? Isn't that special? Yeah. And I wanted to see format. Graph type, line bar, scatter. Maybe you prefer to see it that way. But there's a, I forget how to do it. There's a geo map. No, maybe because this is all United States, maybe it doesn't offer a geo map. I need to. I'll figure that out some other time. But there you go. We're worried about resumption. So if we go back to now, if you want to average it out and look at it quarterly, you can see, right? So now we're averaging. Okay, now we're averaging. It seems like we've had in the last quarter, it has not continued to drop. And notice it's basically, if we were doing technical analysis, it's a role reversal, isn't it? Oops. This one I wanted to do. 3-month average, 3.2. 3.2 is high. Fed can't cut. Yeah, I guess I won't do it. Maybe I'll do it this way. Let's see, is this the right account? See, isn't this cool? I have my own dashboard at the Fed. Oh, yeah. Mortgages coming down. That's good. Back below 7. But still too high, right? Unemployment dipping. Look at that, dipping. What? That was the craziness of the last NFP, huh? Again, Fed can't cut. Look at the money going up. Okay, what does money going up mean? Inflationary. So, right, here's our money supply going up, and you can see it's just post-COVID. So we were at 15 trillion, then we went to 22 trillion, and we've stayed about 22 trillion. And guess what? Well, during the period, it came down to 20 and a half trillion. You know, inflation moderated, and then we had an acceleration here in 2024, started rising back up above 21 trillion. Now we're approaching 22 trillion. Wait, what happened to Biden's Inflation Reduction Act? I thought the Biden administration was reducing. Increasing. So anyways, inflation, moderation, reflation. So we'll see what happens from here. But you must be able to oversee like the CPI, right? Okay, I have this percentage change from a year ago index. Okay, so that's good. So I already got this set up from our presentation. Look at PCE. Isn't this nuts? Look at that. This is where we were post-COVID or pre-COVID, COVID, and now we've gone from pre-COVID of, we'll call it 15, and now we're well over 20. Whoa! Skykiller says, does QT matter? Yes. What does QT do? Lowers the price of bonds, increases interest rates. Now, at the last Fed meeting, we were told that they're going to stop. Now, 3 years ago, they laid out a plan, a 10-year plan for that, for quantitative tightening, and all of a sudden, if when they're selling, they're raising interest rates. So why are they stopping when the job's unfinished? Correct, Skycaler. Yes. So interesting. Why are they stopping? Has the Fed sold $5 trillion of their balance sheet? No, they have not. So this rise is disconcerting for us. That's what we're looking at now. This falling would be accompanied by wage growth. Wage growth would probably increase inflation. Inflation would probably lead to a higher than usual Fed funds rate. So this would stabilize. Then inflation expectations at the University of Michigan would rise. Remember, it's future inflation expectations. It's only part of the UMich report. Okay? But part of that UMich report is what consumers will think of inflation next year. Okay? And according to the Board of Governors, money supply is increasing, which is inflationary. Yeah. If the Fed decides to cut less because of CPI being high and PCE being high, then the 30-year mortgage is going to be stuck around 7. Cool, right? I'd have to do research to find out which Fed balance sheet. It's not gonna find it. I'd have to do research to find out where the Fed's balance sheet is. See, it's very specific. So we don't want assets and capital. We don't want liabilities and capital. Total assets, but from whom? Total assets from whom? So anyways. Some of this is interesting, right? Money market funds. It looks like it ends the third quarter. You find out how much cash is in the system and whether it's going to be invested somewhere. Delinquency rate on credit card loans. That can show you the health of the economy, right? Anyways, you can get stuck on here. You can get stuck on here and really find widgets that you want to add. This was for my annual outlook. Right now, things are somewhat flat, slightly risk on. I've already gone through all of this in the fundamental trading team webinar that we did hours ago. We can go to the scalping section and see if tomorrow's CPI is of interest. And it is. So if you were going to think, what if inflation is unusually high? This is the situation. No scalp in Aussie dollar, but US dollar strength. Scalp on euro dollar, US dollar strength. Scalp on pound dollar, US dollar strength. No scalp on Kiwi dollar. Interesting, Kiwi and Aussie don't have scalps. USD CAD, there's a scalp, US dollar strength. No scalp on USD Swiss franc. All right, so we can see pretty decent opportunity for dollar strength tomorrow if inflation comes out hot. Okay, which one do you want to trade? I would say either USD CAD long or euro dollar short. We got our eyeball on parity and beyond, so why don't we take a look at the scalp? But I want to see a little further than the scalp. So we're going to look at it through the lens of scalp, but we're going to look at the day trade. And we're going to say, okay, if actual is greater than consensus, based on past performance, which does not predict future results, but based on past performance, highlight the 100% of the time that it produced US dollar strength. And you can see it popped and then dropped. So the scalp went up, probably to a pivot section, and then a collapse. So the initial scalp is long, and then, whoa, a pop and drop. In October 10th, greater than expected, pop and drop. Okay, September 11th, as expected. August 14th, as expected. July 11th, less than expected. June 12th, less than expected. May 15th, less than expected. April 10th, more than expected, dropped and ran. Okay, March, as expected. February, more than expected, dropped. Okay, so we have all the data. Isn't that cool? We have all the data. And even more recently, there was a pop and drop, out of position type trades. So maybe short-term long, but then you probably ran into either pivots or like daily or weekly moving averages and drop it like it's hot. Drop it like it's hot. Good to know. HOTTOGO. Okay. Pound Swissy kicking off the daily projected low. Pound dollar kicking off the 4-hour projected low. Euro dollar kicking off the projected 4-hour low. Kiwi dollar kicking off the projected 4-hour low. Aussie dollar kicking off the projected 4-hour low. 10-year T note. Oh, whoa, whoa. Dropped off the high and is heading down. Uh-oh, that means yields are up. Huh? Uh-oh. Uh-oh. Looking at gold. Wow. Gold, what the heck? Well, look, if you're a bull, based on what happens Tuesdays, this time of day, you should already know you're late. So anyways, this should be a bounce zone. Okay? If you're a bull. Okay? Bears should understand that that's the projected low, really, for the first, for the day. So you should be taking profit if you were conservative. All right, well, you should know that. Silver, let's go with silver. Yep, silver. What's going on here? Where did the bears sell? Projected daily high. What's their intraday target here. What's the end of day target? There. Oh, okay. USD CAD, and we're stuck in a range. Okay, these are the buy zones if you're a bull. These are the sell zones if you're a bear. And we're kind of going nowhere fast. Neutral. Aussie yen. Daily implied low. Intraday implied low. So if you're a bull trying to climb, that's that. Okay, obviously bigger picture, bearishness there and there. But it double bottomed and then 1, 2, 3'd. So, Cool, right? Pretty consistent trading here. Okay. Once again, we're going to hit peak volatility in 2 hours. So if you would think something like this in 2 hours and then fizzle out, and then like this in this period. You see? Up, fizzle, 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 up. Okay. Oil, oil, oil. Oi, oi, oi. Okay. This is probably a profit zone around 74.5 to 75. So you just kind of combine all of these. Okay. Based on what WTI does in the past, we're likely to hit peak volume in the next couple hours. Next, 2-3 hours. And then lose trading volume. So the idea here is oil goes up, we have a bullish day, but in 2 or 3 hours, we just run out of steam. Fizzle, 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 right? You guys getting this? Does it make sense? How do we know about fizzle? Well, on Tuesdays, going back many Tuesdays on WTI, okay, we lose volume and volatility after the stock market open, and we lose trading volume 10, 11, 12 a.m., 1, 2, 3, 4, and this is the end of the trading day. And it moves sideways and moves sideways and moves sideways. And there's a little bit here pre-London Open. Then it fizzles out. And, okay. And that's when we start hosting our, well, actually, we have webinars at traders.com at this time frame and at this time frame. I wonder why. Okay, because it's the best time of day to start trading. Best time of day. Amateurs, they like to show up around here, and they're entering trades when professionals are leaving the market. Okay, they enter the trades of the day here in London, and then they enter the trades here, the trades of the day in New York. Good to know, right? So this would be the first. We'll call this A. Okay. One, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, so this is A. This is in here. And we'll say a couple hours ago. Yeah, so look, dip here was this opportunity. The dip here was this opportunity. Cool. And then we know up here, okay, likely to be the beginning of these guys taking profit. I like this information. Do you guys like it? Check it out. This updated 5 minutes ago. It updates without you having to reload the page. I know, right? Give me Forex trades with 75% chance. Okay, these are little skippy scalps. That's why I call it a scalping radar. Because many of these are just like back to the moving, back to resistance, back to resistance. I'm a trend trader, so I don't think I want to trade it back, so I can ignore a lot of these. And also, they're not very many pips, so it's not something that I'm that interested in. And, well, there you go. This is why, I mean, this one is a maybe. A breakout pullback. Okay, let's bring this one up. All right. So you can see a few hours ago, I think it was hours. I have to double check the time frame here. We were here, so you got the breakout signal. This, well, I shouldn't say signal, but alert, not in a signal sense, but in a sense that we broke through perceived resistance. Next target is going to be from here to here. Obviously, this is going to be important. Okay? Cool. Cool, 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 cool. So, how do you trade a breakout, you say? Oh, you buy the dip and let her rip. Okay? And then if we get up to here, then that's a whole new thing. And then if we get up to here, so let's say it does this next. Oh yeah, well then we have a much different thing. Now we got a trend going. So this is a breakout, which I like better. Like, I don't like trading back to resistance. But if we break resistance, I want to buy dips, right? And then, of course, if we get through here, then it's no longer range, because the way I look at this is it's sideways. But we had a midpoint breakout, and so now we would test this resistance, and then above that resistance, we actually have a trend. Cool. So that one I could consider. And that came out at 3 o'clock this morning. Okay, so this came out 6 hours ago. Okay, 6 hours ago. And we have 1, 2, 3, 4, 5. Yeah, so the green candle was 6. Then it dropped. And then you'd basically buy it at the roll reversal or kick it off the moving average. Cool. So let's take a look. Is that interesting or not? All right. So we go to Euro. Let's pull it up here. Hourly chart. Okay. First of all, do you have a strategy for this? Well, this is a dangerous sideways market. Like I said, I envision this market as range bound. This is the bottom, M2. This is the top, M3. So it's very difficult to tell you who is in charge of this. Is it bulls or is it bears? Well, we don't know. We had a gap. Okay. I did gap training a week or two ago. And what I taught people was this. So is that what we want to try to do? Well, on the hourly, it's up to about 84. Is that what we want to do? Well, I look at this and I don't know. What would you do here on a daily chart? How would you analyze this? Like that? So even though this says, right, 6 hours ago there might be some up, doesn't mean you need to be a buyer, does it? No. That's why I'd like you to have a bias. But nonetheless, let's go into here. And, okay. And it never got past 83.5. It never got higher. Why? Well, it's not, well, a couple of reasons, I suppose. One of them, let's go this way. One of them is our target for the day, isn't it? Profit target, conservative. Bullish profit, aggressive. So we got up to our zone. What did bulls do? Bulls sold. Well, that makes a ton of sense, right? Okay. So we had that move. It looked interesting. Too short term. I kind of like longer term. So even though probabilities are there, you should be the one that makes decisions, right? I guess we'll leave it at that. So none of these are really trendy. I like them to be bigger trades. Now, it might be because when you have certainty high, that means there's less meat on the bone because you have more levels of confirmation. Dropping it down to 60, what do we see? Maybe a breakout here on CAD yen from 630 to 670. It's not very many pips, 30, 40 pips. So maybe. Okay. Triangles are non-directional. So maybe a kiwi later. So if it breaks out, I like to buy a dip. So we're at 86, but I'll buy it at 8 when 86 is support, not resistance. So I'm going to filter that out. This could be interesting. Pound Swissy, huh? This came out an hour ago? Yeah, this came out an hour ago. Interesting if you can buy a dip and let it rip. Ascending triangle is bullish, and that's an opportunity. That might be the best one if we were looking at that for a little scalp, but it's only predicting, oh my God, entry 95.68. I guess it's not bad. It's 25, 30 pips. But then if it creates a new trend, it could be worth a lot more. So then you buy the next dip, right? So why don't we take a look at that? Okay. Now on the long term, I'm a bear on this sucker. You should realize that. You should know that. We've been doing it for a while. But I want to look at it with different eyes just to show you. So the idea here on this time frame, okay, is that this could, if we're going to consider this a higher high, it could be a scenario for today in which you buy a dip and take it up to the higher time frame, and I would still think down in the near future. But that doesn't have to be today, right? Okay. Okay. So right now I'm a bear, so I could filter that out and say I don't want to be a bear. But if I was just going to, let's say, scalp or day trade this, I could set it up mentally that this is a higher high, that's a higher low, that's the fib level, go to a fiver, and this is my buy zone on a fiver. You guys following me? You understand what I'm doing? Looking at the data, reverse engineering everything. So maybe today is an up day for Aussie yen, but later this week the downtrend continues. So we can be short-term long to long-term short. Okay. So let it rise. Right now, scalpers are looking to buy higher lows. You can see the higher lows like from this point on, right? So how is a bull going to look at this if you're scalping from a bullish point of view? That's a bottom, and then it becomes a high over here. So higher high, buy it. Higher high, buy it. Okay. Breakout, buy it. Breakout, buy it. What do you think? That's why I'm doing this. Okay, maybe you prefer this time frame. Oh, well, you'd have to add all that in. I'm trying to get people comfortable with individual tools. I don't want to mix them all together in one because then it's overwhelming. But you're right. One of the best things, Kevin, is when I'm showing you a chart like this, the best thing is then you're like, wait. I need weekly pivots. I need monthly pivots. Good. Good. You want to see what you're missing. You want to know what you're missing. Oh, I see. Yeah. But that's the idea, right? You want to know what's missing and then add what you need. Yes. Which means is you're going through a thought process, which is important. You're not just analyzing, having the tool tell you what to do. No. You're using the tool to make decisions. And so you're like, well, this is okay, but I'm missing something. Where's the weekly? Good. Okay. Now, from this, we can also say if we were going to be bulls today. By the way, I'm not telling you you should be. I'm just showing you some person's thought process. Okay. Okay, ultimately, we could go quite a bit higher than what most scalpers are doing, right? Okay. La. Stock market opening in 25 minutes. Oh, yeah. Okay, I'll get rid of this fib. Don't need to be redundant. This is the last hour of decent volume, and then we're going to lose volume. Watching the 5-minute MACD. It's been bullish since here, 6 a.m. I don't know if that's 6 a.m. New York, London time, right? Yeah, cool. Pre-London, this asset went bullish. Okay, how do you read this? The 21.55 crossed up. The asset accelerated to the upside on the London Open. Some time went by. Fizzle, 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 because all the trades were placed. Then New Yorkers started to come in. Okay. And place their trades, and now we're fizzling on volume. Probably it'll pick up a little bit and then start heading back this way throughout the day. In particular, you know, like this lower low in MACD would occur around the London close as we lose their volume and volatility. But this vertical line is the 21.55 cross. So I'll show you without looking. I'll add the vertical line. Okay. And then, okay, this would be the second chance re-entry. Let's try to get this. Why can't I grab it? Is it up here? All right, second chance re-entry. So this is pre-London, pre-New York. You ready? And they're buys. Cool. What a neat party trick. You guys use your MACD? Okay, look at that. This is the pre-London lunch. So the front run, the exit, the front run. So there are sort of day traders here. Buy it, exit. Buy it, and maybe exit. So this is where you need, as Kevin was pointing out, it would be nice to know where the pivots were. Yeah. I think what probably occurred is more like buyers exited at the first level of resistance. So they're just market open traders. Okay, like this, market open traders. Now let's take a look at what pivot points we actually have. So we have biased pivots weekly. Let's go daily and see if that helps explain what's going on. So we're bulls. We're only looking at bullish opportunities. Let's kind of squeeze this in on a 15-minute chart. No, can't really see it. All right. So yesterday, let's say, if we were bulls on this, we knew that this was the first buying price. We hit it in Asia, it held. We tested again for the London Open. Do you think somebody bought it here just because of that? They were bullish, and that is the price. Okay? Now, the change in direction technically happened here, but someone would have just bought it because they were bulls, and that's the opening price. That's the opening price you would expect. Why'd they get out here? Once again, I don't really see a reason why, except they were shorter term traders. They bought, they took profit at the next level. Is that a great trade? No. But maybe something, because, I like to trade here, but I'm asleep here. So maybe something occurred that spooked the market. Fine. But they got out at the next level of resistance. Pretty short-term trading, though. Okay? And then here's the second chance, isn't it? And so this is the front run, double bottom, long, pre-London. And now you have back to support, New York Open. And now we're trying to see, is this one, or these moving averages now going to be the next support? Or is this trade done? Well, to answer that, you have to know where the daily pivots are, right? And we're supposed to go to above 96 today. So we should go up another 30, 40 pips, maybe 50 pips, and then take profit. But we're running out of time, you see? This is why I say people that took profit here are quite short-sighted. I think what would have happened is they were bears. I think that's the big explanation. So let me show you where bears would have sold, and then I'll put it back bullish. All right. Now, these are called biased pivots because I make you decide if you're a bull or a bear. So someone would have decided to be a bear. Okay, where's their sell zone? Okay, the best selling price of the day, if you're a bear, is right here. Isn't that cool? So somebody tried. So the thing is now, if we look at that general area, is this the new bullish move? Okay. Well, those bears lost money. They sold exactly, look at that. They sold exactly where we would expect them. 95, is it 53? I'm zoomed out a little bit. Okay, 95.53. Okay, so we hit it and dropped. How accurate? Okay, precise even on a 5-minute chart. We tested it, hanging man. Tested again, collapse. Okay, so definitely bears sold. Most likely they had orders there. So they had a limit order to sell. Okay, great. We take out all those orders, higher high, higher low, but this is all New York. Front running New York now. The New Yorkers decided to take it long, breakout, pull back, okay, roll reversal here, roll reversal there. And then you go back to turning it bullish. So again, indicators, bias pivots. So the bears have been taken out. Where are the bulls going? Okay, the bulls, the conservative target for bulls is right there, that dotted line. Okay. Now, I don't normally drop into the 5-minute and go candle by candle with you, but what do you think? Well, Kevin, we're on a 5-minute chart, so we're not talking about that. If I'm going to weekly, okay, this is my plan. The funny thing is I can't zoom in. That's zoomed in. Wow. Okay, daily maybe. Okay, there's the daily plan. So, Kevin, it could be up the rest of the day. Okay, so if we're up the rest of the day, let's do it like an if-then. Let me do it in blue. It stands out nicely. All right, so if our target is here today, then tomorrow and the next day could be like this. What? Because we're also trying to predict where these moving averages are going to be in the future. They're going to be lower and to the right. Okay. So without taking from our strategy has been, okay, now we got to update this because things have moved. Like that. That's the strategy. The tactics would be let it rise and then look for opportunities to take it down. Is that going to happen? Oh, I don't know. I have no idea. So you can choose what you want to do here. You can be short-term long, but then longer-term short. The easiest thing, I don't know about easiest, but maybe the safest thing is ignore the up if you're a bear. And then pay attention to when bullishness becomes bearishness and then re-enter your trade. But we could have a good update today. Sure. So I'm trying to zoom in and I think maybe we can see this on a 4-hour. There's our trade plan for the day, right? Okay. Pre-London, London, pre-New York, London close. And then what? Well, what if it does this the next day? Oh! Well, if it does this on Wednesday, then we might be short for a month. So up for 3 days, down for 3 weeks. short-term short, but long-term long. Or, well, long-term, short-term long, but long-term short. Up for 3 days, down for 3 weeks. Well, normally this asset is going up this time of year, but does that look bullish to you? So I'm not that quick to jump ship, change teams, you know? Not that quick. Some of these have double bottoms and all that kind of stuff. Oh, for sure. I mean, they're legit, but I need some time to change. So if I need time to change, then when I make trades, I better stay in them. Back to the fiver. Stock market about to open in 7 minutes. Hey, did you click the like button? Are you liking it? Okay, we've had 100% retracement from the previous top. Looks like now we have a higher high. Congratulations. I think maybe I'll play some music in the background. Are you guys okay with that? I have to get royalty-free stuff. I'll just get some quiet background music here. Wait, Mm-hmm. This is called Lost in Paradise. Is it going to be any good? Remember, you should be in way down here. Let me draw it. You really should be in here or down here. This should be the second. Like breakout, pull back, 1. Breakout, pull back. Okay, 2. Breakout, pull back. 3, and that one would probably get us to the top. That's the idea. Now this started way to the left even before that. So in theory, on this 5-minute chart, okay, 1. I don't know if you would have tried this, pretty low. Don't know if you would have tried this, don't know. Definitely. And then, of course, I don't know the future, but something like that. Okay. And this was even plausible because this is our buying pivot, and that's a double bottom, and it's on a market open. This is just when it became technically bullish. But you can do the double bottom. Remember, right, the training courses, you can do the double bottom, or you can do the higher low. And it could be this higher low instead of that higher low. Doesn't matter, whenever you make the decision. Okay, oops. So 1, hang on, I got it on highlighter. Could be 1 if you wanted to, 2 if you wanted to, 3, 4, and then a 5th one is a new opportunity. And at some point we know in the next hour and a half, we're going to lose volume and volatility, so you would take profit on all 5 if you're day trading. This is how to stack and pack scalps. So, right, 95, 95, 30, 95, 50, 95, 60, and then at some point maybe another one at 95.75. And we're on our way, I think it was 96.20. It's all in the training courses. But we found this on the TRADARS scalping tool, didn't we? I looked at about 6 or 7 scalps with high probability, but I didn't like any of them. Then I found one that looked interesting. I'm like, okay. The psych level is 20 pips above us. All right. So I'm going to continue this over on a new YouTube page. Will you guys follow me over there? I'm going to grab my laptop and move over and do some other stuff. But we can hang out together and watch this trade. Okay, I'm not going to have this on my laptop. I mean, we could watch Aussie yen, but you're going to have to reconstruct everything. Okay? But let me give you where I'm going to be. You guys want to hang with me? You guys want to watch this together as a group? Hey, there's 52 of us. We could certainly watch the trade and chat with each other. So let's see. Let's do a poll. Will you join me to watch this trade for a while? For I have to spell while with an H. Let's see. If we can get 20 people to say yes, I'll do it. If not, well, then I'll just go do my thing. Let me know. Will you join me? Should we hang out for a while? $11 votes. No, I'm actually gonna change the channel, and I'll give you the link. But look, if people don't really care, then I got things to do. I can, right? But if you guys want to spend another hour or something, great, let's do it. So thank you for all the love, but you answer the poll. We have 16 people that said yes. Can we get to 20 something? If 50% of you say yeah, then let's go. Right now, only 16 votes. Can we get to 25? Yeah, right on, Sebastian. My pleasure. 17. $18 said yes. 19 said yes. Oh, that's right. And then when does David start? At 10? Yeah. Cool. Yeah, that's right. David Pegler is doing his session at traders.com at the top of the hour. So, yeah, so we got a good, I'll be here for the next 30 minutes. And we'll see if this trade has some legs at the open. Thank you, everybody. Thank you, Traders Way. Thank you, TRADARS. Thank you, traders. Peace on earth. May the pips be with you. Oh, David says an hour and a half. Nice. He's like, I think. Yeah. Brutal honesty, right? Yeah. Hey man, that's the story of my life. Yeah, I think maybe, pretty sure, definitely maybe. So I'll see you over there. Okay, one last time. I'll see you over there. I'm gonna shut this down. I'm gonna grab my laptop. I'm gonna move to another room. So I'll see you there. And David Pegler, yes, 11 is confirmed. So. Lucas, we got 90 minutes on this trade that we can watch it. Zoom or boom. So peace on earth. May the pips be with you. May your profits be above average. Oh, and thank you to the 27 people that are going to join us. Thank you.